about. So in any year, where the effective tax rate, which is the covered tax, so I will explain what covered tax means, as a percentage of net income of the company is less than 15%. So the law is saying that you will compute and pay additional tax that makes the effective tax rate equal to 15%. So the cover tax as defined by the law is for the purpose of the effective tax rate is that means the company income tax, the petroleum income or petroleum profit tax, the carbon tax paid or payable, together with the development levy and the priority sector tax credits. That means, in essence, the tax that you are paying for that year, paid or payable. Yes, you look at against the net income. So your net income refers to your profits before tax, as reported in the audited financial statements, excluding frank investment income and unrealized gain or loss. So when you get this net income, you divide this amount by, or you divide this, the cover tax by this amount. And if peradventure you have below 15%, right, the law is requiring that you have to pay the type of tax for it to be 15%. Now, for FTZ have new rules, right? With the blanket exemption they used to have, where they are exempted from all federal, local, and state taxes, has been, should I say, taken off for now. I haven't just taken off. What the FTZ now, the new rule they have is they want them to stay and have their transactions in the free trade zone. So the law is saying that where more than 15% or more than 25% of your sales arise from sales of goods or services to the custom territory. So custom territory means places outside the free trade zone. So if you sell outside the free trade zone, 25% of your goods and services outside the free trade zone, that 25% would become taxable here in the custom territory. I mean, under the tax. That's for now. But from 2028, I think from January 2028, any portion of your sales that is transferred to the custom territory would be fully subjected to tax. Now, for FTZ, the provision of the FTZ will not apply to approved entities, except, I mean, the ETR, they are not expected to pay the ETR, except where it's in respect to their sale within the custom territory. So in respect of their sale outside the free trade zone, they'll be subjected to this ETR on that portion. And also, if it's a company that is a constituent entity of a multinational group with a gross turnover of 750 million pounds or its equivalent, or if it's any other company with an aggregate turnover of 50 billion naira. So these are the instances where the ETR will apply to entities, the free trade zone entities, right? So I hope I've been able to give some background to that. The tax authority, like I've mentioned before, probably still need to bring out more regulations so that this becomes clearer. And also, you can still always reach out to the tax consultants for more information around that. So please, give the next question. Okay, this person says, I want to learn more about the small company exemption in tax. Okay, so I think what know of the exemption for small companies, I think we should start by defining what small company means. So that gives us clarity about which companies falls under this bracket. So as defined by the law, a small company is defined as a business who earns a gross turnover of 100 million naira or less, with a total fixed assets not exceeding 250 million naira. So these two conditions must be met for you to qualify as a small company. That means your threshold, your turnover threshold should be below, it should be 100 million or below, and also should have a fixed assets, total fixed assets not exceeding 250 million. So now the exemption given to this group of entities on the law is that these entities are going to be exempted as basically taxed at 0%, right, for their CIT. They're also exempted from development levy, 4%, because the law introduced a development levy of 4%, which is imposed on accessible profits of all companies. So these developments are led in replaces some of the repealed earmarked taxes that we used to have, like NITDA, NASEMI, education tax. So what we have now is development tax, but small companies that falls under that definition I mentioned earlier will also be exempted from this development levy. Also, we're also exempted, small companies are also exempted from registering for VAT, filing the charging VAT on their invoices, and also filing of VAT. So you're exempted from registering for VAT, you're exempted from charging VAT on your invoices, and you're exempted from filing, right? So that's for small companies. So those are the exemptions, some of the exemptions that have been provided for small entities. But mind you, right? However, even though you're exempted from our CIT, that doesn't exempt you from filing your company income tax, because the law says for any company, including company granted exemption from incorporation, whether or not it is liable to pay tax under the Nigeria Tax Act or under the Nigeria Tax Act, under the Nigeria law, you still have to file your CIT. Like, so even if you're a small company that is exempted or you are paying your CIT at 0%, you should still file your CIT. So I think I've been able to give some context to that. Please, to the next question, please. So this person is asking that how are business names now taxed, most especially for architects not registered. Okay, what I will say now is business names are still taxed the way we used to have them taxed under the law of name. Business names are unincorporated entities, your ventures, your enterprise. These are entities that are not limited liability entities. So they are not taxed the same way companies are taxed. I mean, those that will pay CIT, they will be taxed under the PIT regime. So just the way we tax similar to individuals for tax purposes, right? So what they are going to be taxed is the profit of your business as taxed as personal income for that business. I mean, the PIT regime, that's what I mean. That's how the business names are taxed. So all conditions and provisions applicable to PIT, this is how this entity will be taxed. And it's not, they are not taxing your revenue. You also have deductions to take that is available in the law. So you have your turnover, which is your revenue. Then you have to take the allowable deductions and reliefs that is in the law. Then your profits, that's what you charge your income tax band. The PIT regime has this income tax band. Most of you are aware of the 0% of 800,000, which is the first band. So the business names are not taxed at CIT at 30%. They have to go through that PIT tax band. So I'm saying for architects not registered. So what I would just advise you with this new tax regime is if you have business, your operation, you have it as a business, please register your business. Let your business have its own, what's it called, its own accounts, have its own financial records, right? So don't mold things up into your personal accounts. So saying that you're not registered, I will invite you to register with the relevant tax authority. So next one, please. This man said, does this mean that professional organizations such as accounting firm will be required to collect and remit VAT on transaction even after being exempted? Okay, I think I get the angle that this person is coming from. I think it's coming from the definition for small company in the NTA and the definition for small businesses under the Administration Act. But for the purpose of our learning, let me also define what professional service means. One of the previous example we have defined what professional service says. It means any service provided by an individual or a firm having specialized knowledge, skill, and qualification in specific field, including consulting, planning, support service, but it's excluding artisans and people into vocational service. So these are the entities that we call our professional organization. Now, looking at the last copy, the CTC that was just released, the small companies are defined as entities with threshold of 100 million and with fixed assets not exceeding 250 million. That stops them. So that means even if you are a professional organization, you can qualify as a small company if you meet that criteria, right? Or now this person is talking about VAT. Now, the provision for exemption from VAT is referenced in the NTA, right? And they defined what small business. It made reference that small businesses will be exempted from VAT. But the definition for small businesses, the NTA defined it as means business that earns gross turnover of 100 million or less with total fixed assets not more than 250 million, provided that any business providing professional service shall not be classified as a small business. So for that definition, I'm looking at where this exemption about VAT is being given in the NCA. It looks like the professional services are not going to be exempted from VAT because they will not qualify as small business. For my own, it's left to be seen if that's the intention of the drafters of the law to exclude professional services companies from small businesses, right? The same thing they've done for small companies when they're talking about CIT. So looking at the literal meaning of words of the law currently, professional service entities such as accounting firm will still need to have the obligation to file to collect and remit VAT transaction or vatable transactions, right? So it's like I mentioned, I don't know if that's the intention of the drafters of the law, but more clarification might probably be given in coming days. Maybe it's just some clerical errors that will be corrected. But for now, looking at what is in the citizen for now, that is what it's in. So professional firms such as accounting firm will still be required to collect and remit VAT on their vatable transactions. I hope I've been able to address that. Okay, next one, quickly. This person is asking that what can I do as a business or business owner in understanding the new tax law to avoid penalties? Okay, like our BBM mentioned, Nigeria is running a self-assessment scheme, right? And what this means is that you, as the taxpayer, you have the obligation for you to understand the law and also file your taxes, right? And as we have it, the law is in English, right? And it's available for everyone. So the first thing I'll tell this person to do is that please get the law, right? As much as what people always say, just like the misinformation that we have in the public space currently, when I ask people that this stuff that you're talking about, or where is this coming from? What people say is that they said they posted it on our group, they said it in our association or something. I was like, but did they mention to you the part of the law or the section of the law that is saying this? They said, they did not tell us. I was like, but why can't you ask such question? And why can't you also get these tax of these things are in English? And also, if you are finding it hard to get understanding around it, that's why we have professionals, that's why we have tax advisors, that's why we have people that this is their day-to-day activities. You can always reach out to them, right, to get your understanding about it. So one of the first things I'm going to do is to please get the law, right? Understand your business also, what your business entails, and also understand which part of the law relates to your business. The law is it's a big book that covers everyone. Just like the way you read your Bible and a lot of information is there. The law also has a lot of information. And for the law, not everything in the law might relate to you. I mean, if you are selling and buying, selling and buying normal consumer goods, right? You are not an insurance company. There's something for insurance company. So you should not be looking at what it means in insurance company because you are not in that line of business. So understand your business, understand what the law says about your business, right? And you should work on filing your taxes in accordance to the law. If there are exemptions for you, there are reliefs for you, you should understand this so that you're able to. So get the law. The law, like I mentioned, they are written in black and white, and it's in English. And majority of the provisions is something that you can read yourself. And what I also tell you, if anybody's telling you, this is it, you can also always tell them, this what section of the law or which part of the law can I read. So you can always sit down with this and also read. So understand the applicable taxes that's relating to your business. Identify the tax that applies to you or your business and the specific obligation under the new tax law. So familiarize yourself with this. Also, like this kind of webinar, join webinars, join conversation from credible platforms. Speak with professionals, engage with, you can engage with tax authority. There are a lot of information from their websites also, from NIRS, from LIRS, as the case may be, or any of the state tax authorities. They also bring out public content that they post on their website. So please seek professional guidance early enough for you to interpret the law. There is no ignorance when it comes to law because it's there in the public space. We are meant to read it, right? So speak with professional, engage on credible platform. It's not all webinars you should jump at. At least you should be able to do your due diligence. Check the persons that come to this webinars also. Check if there are people in the space, right? So you should not be listening to, I would say you should not listen to Sobia. Sorry if I have any Sobia anything. Yeah, I mean, they might have probably gotten some information, but if someone is going to be talking to you about the tax in depth, make sure they are professionals. And also, like I've mentioned, maintain complete and reliable financial records. It's not business as usual. You should keep your records very well at this point, right? Even if you need to engage an accountant for them to help you with your records, even if it's normal, if it's normal you writing things down, your invoices, keep them, have your company have their invoice, if they usually have invoice, keep all these invoices. These are some of the things that will inform the accountant on how they can help you to build up your accounts. And also pay your taxes as at when due to avoid penalties. So what I would say for you to understand this new law is still going back to the law itself. It's available in the public space. Read. If you don't have your way around it, speak to professionals, speak to colleagues in your field and have the information, right? And join conversations, webinars and even if it's physical conversations and webinars from credible sources and as well. So thanks for all. So let me move to the next one. So next slide, please. Okay, I think there's a question before this. I think there was a few. Okay, that's the next question. Okay, this question, I think, what can I do? Okay, I think this is the question we just answered. What can I do in order to, okay, this is the question we just responded to. Please, the next one, please. I want to understand the reliefs and the reductions actually that bring about to reduce tax expenses. Okay, so the law also gives relief, right? So it's not just about taxing. There's some reliefs and exemptions that the law has also provided. The tax law provided several reliefs and deductions that help reduce your tax expense, both for businesses and for individuals. So to understand the benefits that is available for you, you should also first understand which taxes is applicable to you, whether as an individual or as a business owner, so that you can correctly apply these reliefs and deductions. So for income earners now, some of the eligible deductions that you have for individuals includes payments, the individual contribution under the National Housing Fund. It's an allowable deduction for you, even though for guys in the private sector, it's now optional. But for anybody saying that is still contributing to that fund, it's any contribution to that fund is an allowable deduction. Individuals' contribution under the Nigeria National Health Insurance Scheme, any contribution to that is also an allowable deduction for income earners. Contribution under the Pension Reform Act, so the pension contribution, either the one deducted from your salary or any voluntary contribution to that pension scheme. It's an allowable deduction. So interest on loan for developing an owner-occupied residential house, interest on loans, right, for developing an owner-occupied residential house, annual amount of annuity or premium paid by individual during the year, right, in respect of insurance on his life or the life of a spouse, is also allowable deduction. And also, there's a new introduction into the space now where we have the rent relief. So the rent relief is 20% of your annual rent paid, subject to a maximum of 500,000. So if you look at your rent, do 20% of that. If it's below 500,000, that is your relief when it comes to rent relief. But if it's above 500,000, the maximum you can take is 500,000. There are conversations in the public space that is this enough? I mean, uh, the drafters of the laws must have some thoughts around this for them to get this. But that's what the law prescribed for now. So, well, we just do a recap. Rent relief of 20% of annual rent paid, subject to a maximum of 500,000, whichever is lower. So that is what we should be taking as a rent relief. So these are the reliefs and deductions that have been provided in the law for income earners. And for businesses, all expenses that are only and exclusive related to your business can be taken as deduction. So any expenses that you incurred in your business that is only and exclusive to your business, right, can be taken as allowable deduction. So you can also read more about that in the tax law. There is a section for tax incentives and allowable deductions. You also see that there is a comprehensive list there for you to be able to pick. Thanks. So to the next question, please. Okay. This question is asking that how is a business name taxed? Is it based on the profits, that is, revenue minus the expenses or total income? So what is being taxed is your profits, not your total income. So this means that the tax is calculated on your revenue minus your allowable expenses, deductions, reliefs that's provided in the law, which gives you taxable profits. And like I mentioned the other time, as the distinction I made between companies and business name. So if this is a business name, it's taxed under the PIT system. So when you get your profits, like I said, you will run this under the tax band. Right. So for the tax band, maybe I should just elaborate a little on that. So after getting your profits, right, you run it through the tax band. What the law has provided now is that the first 800,000 is taxed at 0. The next 2.2 million is taxed at 15%. The next 9 million is taxed at 18%. The next 13 million is taxed at 21%. The next 25 million is taxed at 23%. And the next anything above 50 million is taxed at 25%. So for example, let me use this as an example. So let's say after your computation, you have a taxable profits of 2 million naira. So what the law is telling us, the first 800,000 of that 2 million naira is going to be taxed at 0%. Remember, I mentioned 2 million naira. So if you are saying, if you are having 800,000 as 0%, the remaining amount that left to be taxed is 1.2 million. That is 2 million minus 800,000. So the 1.2 million will be taxed at the next tax band, which is at 15%. So that means the 1.2 million will be taxed at 15%. So that's how you run that through the tax band until you fully exhaust the profits. So thank you. So to the next question, please. So this person is asking that explain the VAT filing computation. Okay, I mean, this is what we have as how we compute our VAT still the same. When I say the same, is that Nigeria runs an output input VAT mechanism, right, in arriving at your VAT payable. I was having a conversation with someone not quite long, right? That's why I'm happy that tax is actually getting some form of awareness and people can start knowing the right thing to do. So what this person mentioned to me that, oh, his own understanding is that anytime he charges VAT, right, he just have to take, and this person even works in a manufacturing company, is an accountant in a manufacturing entity. So he says anytime they charge VAT, that's the output VAT. They just pay, they don't take deduction of their input VAT. Because in the previous law, it was restricted to stock in trade and goods that are used to produce other goods. So this entity should have been able to claim input VAT, but they've been leaving money on the table. But what the new law has now done is that it has expanded this. If allowable input VAT on fixed assets, on goods and services can now be claimed in as much as these input VAT or goods that you have claimed the bill for are used in producing your taxable outputs. Right. So like I mentioned the other time, Nigeria runs an output and input VAT mechanism. So the output VAT, right, is calculated by you the VAT that is applied to the value of your taxable supplies. Right. So when you are selling, if your goods or services is invertible or supply, the VAT you've charged, right, that's your output VAT. For your input VAT, it refers to the VAT that you've incurred on goods and services purchased from making your taxable supply. So your own purchase is also the VAT you've suffered. That's your input VAT. So what you do when you want to file your VAT is to look at your output VAT and your input VAT. So your output VAT is 100 naira. Your input VAT is 50 naira. So what you're expected to pay is 50 naira. That is 100 minus 50, right? That's what. So if your output exceeds your input, and just like the example I just gave now, when your output is 100 naira and your input is 50 naira, well, that's your output exceeding your inputs. So that means that difference is paid to the tax authority. But there are cases where also maybe your input VAT is higher than your output VAT. So for example, your output VAT is 15 naira in this case, and your input VAT is 100 naira. So that means you have more input than output. And what the law allows you to be able to carry this as a credit against your subsequent VAT, or you also can request for a refund, right? So you have those two options. So to answer this question, your VAT filing computation, how you compute, is you looking at your output VAT and your input VAT. And mind you, please, you need to also know the kind of goods and service that you are providing to know if it's compatible or not. And a comprehensive list of these has been provided in the law, which you can consult, right? When you are selling, please know if this is compatible. So don't start charging VAT on things that are not compatible. Thanks. So please, the next question. So this person says, how best should small companies see you cut down amount of VAT that they pay? Okay, when they say cut down, that looks very strong. So I mean, maybe they should pay themselves lower salary. I mean, with low salary, they pay low VAT. No, I mean, that's on the lighter note. But the law does not differentiate small company CEO from large company CEO, right? What the law is looking at is what is the income of the CEO. So if the CEO does not want high income, the CEO can just do like Donald Trump, that is not collecting a salary. I think it's said they should be paid just $1. So maybe the CEO can be paid $1. But now, just to get to for me to answer that question, right? First thing I will mention is that the exemption that the company does not cover the CEO. The CEO is an individual that is taxes to be applicable under the personal income tax, and for the company, even that's another tax exemption. So even though the small company is exempted from tax, the CEO is not exempted because the small company is exempted. The CEO has to pay his tax. Just like what I've mentioned before, right? The CEO also, which is an individual, the allowable reliefs that I've also mentioned, they are also available for the CEO. I mean, the allowable reliefs and deduction, contribution to NHS, contribution to NHIS, the National Health Insurance, voluntary contribution to his pension scheme, right? They are also available for the CEO. So the best practice is to also follow the deductions or the allowable deductions and rebate that has been provided in the law. That is best practice. But if the CEO can go further, it can also engage professionals, right, to also advise him on good and ethical tax planning. So not to use the word to cost his taxes, but I mean, if it's going to probably increase his contribution to his voluntary pension scheme, as much as you can put money there, you have that belief to reduce your taxable pay. But I mean, there are professionals that can advise him on tax planning, but there are also beliefs. And also, they're even going to still advise him based on the law. I mean, they won't go outside the law. So there are also beliefs that. So the best practice are things that have been prescribed in the law for him. Thanks. So to the next one. So this person is asking, does a business name that has a revenue below 100 million or fixed assets or below 250 million qualify as a small company? And like we have emphasized over and over again, the business name is different from a small company. This exemption is for companies, not for business name, right? If you are a company, you have that threshold to consider 100 million revenue or fixed assets below 250 million. But for business name, you are not a company. So for PIT, the exemption that has been given is that the first 800,000, right, of your profits will be exempted. I mean, it will be charged at 0%. Let me see this the right word. It will be charged at 0%. So please, as a business, as an enterprise, you don't qualify for the exemption given to small companies. Like small companies are exempted, but their taxes to be charged at 0%. They are CIT, and no business don't pay CIT. You pay personal income tax. So please, business name don't qualify for small company exemption. So please to the next one. Okay, this person is asking, how does rent relief work? Is the rent collected? Is the rent collected from the landlord? No, no. I don't know the angle of the second question. If the rent is collected from the landlord, I mean, are you asking if the tax authority or the government will collect the rent from the landlord? No, that's not the case. And I don't know why you want them to collect your rent from the landlord, right? But the landlord is expected to pay tax, right? After he has taken his own liable deduction also to pay his tax on the rent that he has collected. And the rent that he paid over to your landlord, those are his own rental income. And he's also expected to pay personal income tax, right? So how does the rent relief work? Going to that question. The law has abolished what we used to have before, the consolidated relief allowance, and it has introduced what we have as rent relief. So rent relief is an allowed deduction for personal income tax purposes, right? It is targeted to provide relief to low-income earners on their tax paid. And like I mentioned before, there's a calculation for that. It's saying that it's a percentage of your rent paid. So it's not all the rent you've paid. So you paid the rent of 3 million naira, your rent relief is not 3 million naira, right? It's a percentage of that. It's saying that rent relief is 20% of the annual rent paid, subject to a maximum of 500,000, whichever is lower. So if your rent is 3 million naira, 20% of that, which is going to be 600,000.
You are muted.
Oh, sorry, yeah. Okay, so can you hear me now? Okay, so let me just do a recap. So the percentage of your rent relief, right, your rent relief is a percentage of your income. So let's say you have 1 million naira as your rent. 20% of that is 200,000. So what you'll be taking as your rent relief is 200,000 because it has not got it to the maximum of 500,000. But if your rent relief after calculating 20% is above 500,000, 500,000 is the cap. And said this provided that the individual accurately declares the amount of rent paid. This is the law. I'm still quoting what the law says. It said, what I said, provided that the individual accurately declares the actual amount of rent paid and other relevant information that may be prescribed by the tax authority, right? So that means you have to accurately declare your actual amount. So I was having a conversation with a friend recently and was saying, for me to enjoy this, so I think his rent is around 800,000. So I said, for me to enjoy this rent relief, I have to go and meet my landlord. He should give me another receipt that will maybe be up to 3 million so that I'll be able to get my 500,000. But getting his landlord, his own landlord, the landlord told him that no, my lawyer have advised me that I should not do that because by the time you tell the tax authority that you pay 3 million naira, that means we've reported to them that the rest that they should be expecting that I should also declare that I've received from you is 3 million naira. So that's just on the lighter note. So what I'm trying to say here is that you have to accurately declare your rent. And what most persons let me say, in my own opinion, some of the things that you have to also provide will probably be the receipt of your rent and also your tenancy agreements. And this is new. Like I've mentioned, the tax authority can still ask for more documents. So I'll leave it to that. The tax authority will know the kind of document they ask. But in my own opinion, I think some of the information they also need to ask will be your rent receipts and other information that we will expect from them. And some of the conversations that we also had, I think this is my last question, so I'll just be rounding up. Some of the other conversations that also help people say is that, oh, there's husband and there's the wife and they paid rent of 30 million. And the husband claimed the 30 million and also the wife claimed the 30 million. The tax law has not addressed that. So that's why we also be expecting some form of guideline from the tax authority. But like I also give my own opinion, right? I don't think they will be able to take it separately. I mean, the rent that was paid in that household is 3 million naira. So say the husband to go and claim 3 million naira, the wife to also claim 3 million naira, that means they'll be claiming 6 million naira credits. I don't think the government will want to be that benevolent, right? But like I mentioned, the tax authority still have to give us guideline on what should be done. Maybe the husband and the wife, if they need to get information how they divide it, or probably maybe the name of the person that is on the receipt, maybe that's the person that will claim it, is left to the same. But I mean, the January filing period is coming close, and we have to start paying paying using the new law. So I expect that the tax authority should at least give some guideline before we file our payment for this January. So he said you're asking also that how visible or realistic is it to implement this rent allowance. I mean, the drafters of the law, I mean, they are professionals, so I know they will have looked at how this will also be operated here in Nigeria. There are some countries outside Nigeria and other jurisdictions that also run the same thing. So I think probably they'll be able to learn from them. I mean, I know that there will be a mechanism to run this. I might not have the full information on how they want to do this. Like I said, you might just probably start from getting your rent receipts and your tenancy agreements, how they will verify, how this will work out with your landlord, and how this verification will be done with the tax authority. It's left to the same. But I think it's something that is visible, something that is visible, if we have the structure to run it. So, Baji, I don't know if that's my last question. Do you guys have any other question before I give the floor to Tomi?
All right, thank you.
I think that's the last question.
Okay,
And,
thank you. Thank
all
you
right.
very much. So, like I've mentioned, it's an ongoing conversation. These are conversations that we'll still continue to have. As we expect more guidance from the tax authority, we'll keep dishing about. I mean, some of us are part of my community, both on LinkedIn and WhatsApp, and also from BBM. all this personal information as given by the tax authority and available in public space, we also share with you so that we can be able to get the compliance right. So thank you, everyone. So I'll give the floor now to the next speaker.
All right, thank you so much, Olamide. Thank you so much for sharing. Thank you for responding to those questions. Thank you so much. So we have the third co-host here that will address numbers of questions as well too. And that's in person of Tomi. So Tomi, you can as well introduce yourself. We're unable
All
to
right.
call you the other time. Thank you.
Okay. Thank you so much. I've been learning not for the past how many hours now? 1 hour, 30 minutes. And sincerely, it's been an enlightening session for me personally, I must say. So thank you, Olamide. Thank you, Abajide. So straight away, let's just go straight because I don't think we will have sufficient time to take all the questions. Now, does FRS still exist? Yes, FRS exists in form of NRS. Now they are called NRS, Nigeria Revenue Service. So now, if you look at the act that established FRS, that has been repealed. While we now have a new one that established the NRS, Nigeria Revenue Service. So, but if you ask me, I would say it's just the change of nomenclature, though you will get some sort of argument from, especially from the tax authorities themselves, to say it's not just about change of name. But so far, for what I've seen personally, because now you said NRS will be collecting all revenues that accrue to the federation. Now, when you say federation, you are saying all for the whole country, but NRS is not collecting paytas for that the state IRS collects, because that is collected by the subnational government IRS. So definitely that particular wording is not accurate. So they are not collecting all revenue that accrues to the federation. I know they also said they'll be collecting revenues that accrue to the customs, Nigeria port authorities, so all revenue, but I don't think that's in place. I don't think so. So generally, it's just more of change of nomenclature, just to have something. Although that's one or two other changes, though not significant. But FRS, in short, in summary, FRS still exists, but in the form of NRS, because the act that establishes FRS has been effectively repealed. But again, like I said, still in form of NRS. So can I go to the next question? Okay, what are the tax reliefs in the new law? There are a lot of tax reliefs, and I heard Olamide mentioning just a couple of minutes ago that you can't have a tax law without reliefs, incentives, reductions, and all of those things. So we still have a lot of them. A lot of the things we have in the old laws are still in the new laws. Now we also have some new ones added, and just a few ones were actually deleted. So there are a lot of tax reliefs, a lot of them, right? Yeah, so then how do we treat VAT in the oil and gas industry, where as a contractor, your VAT is withheld by your client, e.g. Chevron, and you're withheld from your subcontractors and vendors? How do you use VAT to reduce output? But I think I had this discussion with a colleague of mine. Was it a colleague? I think we're about 5 or 6, and this particular thing came up. And I know when it comes to VAT withheld as source, it can be, it can be, would I say technical now? But sometimes it's just some of the things might not really add up. I remember we were trying to use an example then for VAT withheld as source, and then by the time you combine that with your own VAT obligation. So no, again, my answer to that is can be quite messy. So maybe Olamide and BBM can also add one or two things. But if you're having issues, right, you can just reach out to your tax authorities. If you're having issues claiming your input VAT, so you can reach out to your tax authority. So I know you asked how do you use input VAT? Yeah, I think it's related to the question. So if you're having issues, especially oil and gas and those that have been appointed by the FRS, NRS, whatever, to withhold that source, right? So please reach out to your tax office. So next question. Okay, how CGT going to be computed? It's going to be on total profit and on equity stock from inception to when it is sold. Besides, will it be on individual equity shares? So the way equity is, CGT rather, is charged on shares generally is on gains, not even just on shares. Chargeable CGT is on gains, like just from the name, chargeable gains tax. Though now we don't have chargeable gain tax again. It's now tax on chargeable gains. I think that's very interesting. That's actually very interesting. So, but however, like I said, the general principle is when you make a gain, of course, before you determine your gains, you take away your principal, you take away any expense you incur in making disposal, take away all of those, and before you now arrive at your gain, which you will now include as your taxable income before you subject it to tax, right? So generally, it's just on the gains, actual gains you made, less the allowable expenses, right? Next. Okay. You know that's 20% tax charge. Is it deducted based on transfer prescription? I don't understand this question. BBM, do you? 20% tax charge. Where is that? BBM, if you do, you
I
can
mean, I think
just.
it's one of the conversations in public space where people mention to each other that, oh, if you don't put narration in your bank transfer, they charge you 20%. I've heard someone said
Okay.
that to me, so I think maybe probably that's the tone that this question is coming
Ah,
from. So I
I
don't know
think I
where
get
that
it now.
information came from, but I mean, we have it in public space that if you don't put your position very well, or if it's a recurring transaction in your bank statements, they charge you 20%.
I get it now. Well, you are looking strange, 20% tax from where? So again, it's just one of those false information that's been flying out there, right? So your
Absolutely.
transfer is not liable to tax, right? What is liable to tax is income, profit, gains, not transfers. Not. I remember I was on a call and somebody said when they send them school fees that it learned that they are going to deduct 6%. I was shocked. Where did all of these things go? Like who started? Who started all of these things in the first place? So even I think just this December when I went to my dad is a pastor, and I was saying now they will start taxing pastors. Pastor will start paying tax. Now why should we pastor? I'm like, this has already been in the law now. Like it's not something new. Like now you're just getting to know. And then he now said one professor said minimum wage earners we also pay tax. A lot of. So I was like, professor, okay. So but he was trying to challenge me. I know now, professor. A professor said something. Me, I said, Baba, even if I'm a professor emeritus, this is my own line. No, no, you are not. They are not paying. But he still did not agree with me. He still stuck to his professor information. So there are lots of false information out there. I can tell you. And just the summary of that is there is no tax on transfers. Forget it. There is no tax on transfer. I need to overflog that. Okay, next. Okay, a clear sweeping summary of the new tax act and its impact on salary earners. Now, if you ask me, for salary earners, nothing much is changing. So what is changing? Well, the major thing that is changing is the tax rate, which applies to all individuals, not just salary earners. So generally, the summary of the revised tax rate is that if you are earning, if you're a low income earner, again, when I mention low income earner, I know some will not agree because based on what we've been using or what we generally agree to is that those who earn minimum wage and below. I remember BBM was saying yesterday that those kind of people are living in penury, that you can't even call them poverty. I was just laughing. So it's actually true. Someone earning 800,000 naira for a whole year, come on. That's that's really bad. Yeah. So if you're any, I call those kind of people low income earner. I still choose to call them that. Now, for those kind of people, they are not paying any tax, right? However, for so I think minimum wage is now 840, though we have a specific 0% tax band for everyone who at least 800K out of your annual income is not liable to tax. But for minimum wage is 840, and if you earn that and below, you are not paying any income tax, right? Now, for salary earners, it's just that, of course, for that salary earners, now you have to talk about medium income earners, so not just low income earners. So salary earners who are medium income earners, you are paying lesser tax compared to the previous regime. I think that's just a summary of all of these things, you've seen, all of this noise you've been hearing for the past how many years now? I think about 3 years now. So your tax will be less, right? Because I've also seen people complain about the scrapping of the CRA. Now, my point has always been that at the end of the day, whether with the CRA or not, you are still paying less tax. So don't worry about the CRA itself. So for salary earners, for a medium income earner, now for medium income earner, I would say from, now this is me now, right? I would say from 22, 23 million naira and below, right? So your tax will be less, though not significantly less, just marginally less, based on the simulations we've done, just marginally less at the end of the day. So, but if you are earning so well, you're an HNI, like we call them, high net worth individuals, then your tax will go up again, not significantly, just marginally also, based on what we've done. Except you are now earning so much, as much as 2 billion, 100 billion, as much as that. Then, of course, your tax rate can go as high as 25% effective tax rate at the end of the day. So that's that for that. Now, obviously, we are seeking to implement the rent allowance. Yes, so there has been a lot of administrative question marks regarding this rent allowance, and all of them are valid. If you ask me, for all the ones I've heard, I've listened to, they are valid, right? Because, for example, you have a couple staying inside the house, and then maybe they paid the rent in the name of the family. For example, let's say the Akinwales. So the question now will be, are you saying both of us can claim it? So I also give an example of several examples I've given so about the feasibility of how it's going to work. But I was listening to the LRS chairman, was it yesterday? Yes, during this session he had with CITN. Now, from what I was listening intensely because everyone has to go and pick one of the things he was going to say. So what he said, which I picked very well, is that you have to provide details of your landlord. So for them, what they want is the details of your landlord, right? So, and how can they get that? Of course, through the rent agreement, rent allowance, rent are received, and of course, you also put the name of the landlord. Because, for example, now if you are filing for Lagos State, right, you are filing your individual tax return. There's a place where already, even before, there's a place where you need to put the details of your landlord. In fact, the tax ID, the name, of course, the address. So what they really want, and it's the same thing I've been saying. The essence of this particular rent relief is to get details of landlords and those who earn rent income, because whether you like it or not, a lot of this income go untaxed in Nigeria, and that's because our tax law does not empower individuals to withhold uh, to deduct withholding tax when you are making rent payment as an individual, right? So only business organizations and corporate organizations are allowed to make that deduction, and you find that the bulk of rent, of course, I think that's very straightforward. The bulk of the rent being paid is those from individuals. So at the end of the day, a lot of those things don't get taxed, and that's why now uh, I think many of them will now start paying because now they will have the full details. I also read in the news, I think a couple of months before now, that LRS is putting together some form of numbering for houses. They are numbering houses for tax purpose, right? So at the end of the day, they will get to know about all of these things. And the essence, once again, is just for them to get details of your rent. Now, the third one, I think I have to move fast so that I can cover as much as possible. Impact of this new act on sole proprietors, I think that has been addressed. Nothing much is changing. Nothing much. It's more or less like what
I
we
think
used to
BBM has
have.
addressed that.
Yeah, okay, all right. So can I move to the next? Okay, the tax reform still allows aspect of self-charging, notwithstanding status of a company. The new tax reform still allows aspect of self-charging. Yes. So I know based on the previous VAT Act, you are required to self-charge where the other person does not charge invoice. I think it's more or less like the same thing we have, except maybe I'm not really sure. BBM, is there anything changing in that regard?
No, we still have the same
Olamide?
charge. Yes, we still have
Okay,
the
it's
same
still the
charge.
same thing. Okay, all right. So next.
But just to look at what the person added as, notwithstanding the status of the company. So when you say status of the company, if you are a small company, you don't have the obligation
Of
for
course, no
charging
obligation
VAT
to.
and filing VAT. So that'll be the exception.
Absolutely. Thank you for that additional. Okay. The next.
Sorry, this is something. Okay, next
Yeah,
slide.
next
Okay.
question. Yes. Yeah. Okay. Does the tax policy affect day-to-day people with immaterial financial transactions? So when it comes when it comes to tax generally, right? It affects everybody, especially as individuals. So, but then you will see some form of exemption, which we also have, like I mentioned earlier. Those who are low income earners, you don't have any business. But for the tax authorities to come after you is a waste of effort from their end because they are not getting anything at the end of the day. So just they won't even waste their time. So they will focus. I can tell you, their focus has always been on the high income earners, which we call HNIs, right? So uh, day-to-day people, again, no exemption in terms of where maybe your status or societal status. It's more about your income level. If you meet the threshold that has been set, you get an exemption. If you do not, then you will be liable to tax. Again, it doesn't have to do with financial transactions, which I hope that's not what this person is referring to. It doesn't have to do with financial transactions. Tax is levied on income, profit, on gains, not on transfer, bank transactions, on any other thing. Okay. So next. Next slide.
Yeah, I'll move to the next slide. Maybe
Okay.
it's not moving.
For ventures trading as limited and wants to convert to enterprise so that only payee is applicable, what advice is good? What advice is good to such clients? Okay. So we want to convert from limited liability to from business ventures, business name to limited liability. Yeah. So of course you are free to you are free to do that. So, and of course you have to go through the CSC for your registration and all of those. Now I know your concern now wants to be want only pay to be applicable to the owner, right? So you don't want the owner to be placed on direct assessment. That's your okay. Trading as limited. I want to convert to enterprise. So that only pay. Okay, I think I get it now. You're a limited company. Now you want to convert to enterprise. Am I still on? Okay, I'm still on. So you want to convert to enterprise. So what good advice would I give you? So first of all, of course, you have to go to the CSC. That's the right authority for you to get that done and get a new certificate. So you said you just want to payee. No, based on what provisions we have now in the new tax act, I think it's better you operate as a liability company because you get full income tax exemption when you are a small company. That's 100 million and below turnover. But as an individual, the exemption you are going to get will just be for VAT compliance. Now you still pay tax on the income by the time they are assessing your total income at the year. Maybe they confirm your profit, deduct your expenses and all of that. So my advice would be that you continue as a limited liability company if you are within that threshold of 100 million turnover. But if not, then of course you need to consider some other factors, because it's not just a straight advice just like that because of one particular relief that you want to enjoy. You have to consider other factors too. Now, as a company, there are more obligations, more compliance obligations, more stricter rules for your operation, right? So you need to consider all of that before you eventually make your choice about switching. Okay, next
I mean,
question.
to add to me, I mean, when it comes
Okay,
to what this person is trying to drive at, I mean, I don't think tax alone should be the consideration. So I don't think tax
absolutely.
alone should be the, so it's a free will. You can operate how you want your entity to be, as a limited, as an enterprise. It's your business decision, right? So, but also aside from tax, I want to believe that also other consideration you should look at
Absolutely.
what you're trying to achieve and what you're driving at. And if it's just solely about tax, like we've mentioned before, there are tax implications for business needs and there's tax implications for companies. So you can just consider that this is what you're trying to achieve. And if anyone that's fine with you, uh, the government is not concerned about the vehicle that you use.
Yeah, yeah.
Thank you for that addition.
Thank you, thank you. And maybe just to add, to it, because I mean, someone already asked me this question. I mean, personally and all of that, and my response was that I mean, there are several. You shouldn't consider only tax when you want to make business and financial decisions. I know it's one of the things, but that's not the only thing. So it should be essential that the person actually look at his or her overall strategy before making this decision and all of that. So, and just to add, I actually hope we can close out this session by 7 or just very
7.
few minutes
Okay.
past 7, yeah, because
Yeah.
so because of that, we won't be able to look at all of the questions that we've even captured in this document, but there are a few that I think it will be essential for us to talk about. I think the next one is on educational services, which I think is very vital. VAT on educational services. So,
Okay.
you want to take this?
Okay. If it is true that schools and educational materials are VAT exempt in the NTA, however, what happens if the school buys a vatable product? How do they claim input VAT as their will? Be not output VAT to net of same, or are schools not supposed to pay VAT at all? So for schools, right? So I know, but I drafted something, I think just on Thursday relating to this for my partner, right? And what they've done is they've moved some of the VAT exempt items to zero rated. Now I think I will have to check because I know one of them still remains under. Okay, yeah, I think almost all. The only thing that remains under exempt is uh, plays and performances. Yes, I remember plays and performances by educational institution. So that remains under exempt. For every other thing, every other exemption, for example, input on tuition, I mean VAT on tuition fees, VAT on books and materials, they've now been moved to uh, zero rated. And the essence of that is they want schools to claim back all of those expenses. No, they don't want them to lose it. Another example of tax relief, tax exemption, or not exemption anyway, another example of tax relief for business educations to also enjoy, right? Which many people still are not aware of all of many of these things, right? Sometimes even explain the difference of zero rated and exempt VATs to maybe non-tax persons can be quite an each task to perform, right? So that's it on that. The major thing that changed is that the exemption was now moved to zero rated. That's the major thing that changed for educational institution. Nice.
Absolutely. Thank you for that. The next one I think is on job loss, exemption on job loss. I think that one can quickly take that one very briefly.
Yeah, that one is just it used to be 10 million naira. So if
Yeah.
your employer sacks you and pay you 10 million naira, you will not pay any tax on it whatsoever. So but now they've increased the threshold to 50 million. So if you are paid up to 50 million, not just even job loss, even personal injury, If you check the ads very well, they also extended it to personal injury, not just for job loss. So if you are paid up to 50 million naira, you are not paying any tax on it. But anything more than that is the excess that you pay tax. For example, you are paid 60 million naira. Now the excess is 60 minus 50. You now pay tax on 10 million. Yeah,
Absolutely.
straightforward.
Absolutely. Yeah. Thanks for that. I think we already captured this.
Okay.
Okay, let's take this one. This is interesting.
Small companies are no longer required to charge VAT and withholding tax. They were not required to charge before. It's not new. Outrage, yes, it's not new. So for withholding tax, I don't think they are exempt from charging. No, I don't think so. Or do you think? I don't know. I don't think so. In terms
Well,
of charging withholding tax, it's on.
so when they say charging, so for withholding tax, as in the law exempts them from withholding tax, right? So when you're a small company, unless in the case where the person they are withholding from does not have TIN.
Mm-hmm.
Yeah, so I think that's
Yes,
it.
I remember that
Yeah,
exemption now. And then the
yeah.
transaction, if you accept transaction around 2 million or so, in
Yeah.
a
So,
particular month or so. Yeah, I remember. So as for now, one is best to register business name or limited. So there are a lot of factors you need to consider. Like BBM or Olamide have rightly said, it's not just about tax. There are some other things that are attached to it. So it's not just for tax purpose you want to change. You have to consider every other factors, right? So that's that on that. Uh, so if I want to enjoy 0% CIT for small business, is the other cost of maintaining limited not going to outweigh PIT? And is the revenue cap for small companies? The revenue cap is 100 million. Again, we've been talking about different versions since for the past 1 or 2 weeks or so, but it has been is 100. Even when we add 50 million, the committee keeps saying it's 100. And then they also said, I know some lawyers have also argued, especially in my place of work, they've argued that where there are conflicting facts like that, you go with what favors the taxpayer. Because, of course, 100 million favors the taxpayer in this case. But the intention is clear. The intention of those guys is to make it 100 million. So 50 million was a mistake, and I think they will allow 100 million to work, regardless of whichever version of the gazette you choose to apply.
Yeah.
okay.
Maybe just to add to that, I mean the earlier part of the question was particular. I think the person is trying to do cost benefit analysis. That I want to enjoy 0% CIT as limited. Looking at the cost of the compliance, does it not outweigh me? What is the cost compared to me now staying on that business name and being charged to PIT? Most people want to move to limited so they can escape what was it called? They can escape the payee of the profits from their businesses. So I think the person is trying to check for cost benefits. That's which one do you think? I mean, don't you think even me going to limited, the cost of compliance there, won't it match up with the pay that I'll have suffered if I remain business name? Do you understand the question?
So I think at the end of the day, I think if as a limited liability company, right, it's more like if you choose to operate a limited liability company, I think you end up paying more tax, especially as the owner of the business, because the profit will be subject to tax under CIT. And by the time, because your business is separate from you, by the time the money is getting to you, I don't know, whatever, for maybe in form of dividend, maybe in that case, you only suffer 10% tax on it as final tax. But in any other form, whichever way the money is coming from you, if it comes to you, you also pay tax on it. So it's not a straightforward answer, really. There are a lot of factors you need to consider, especially for specific circumstances. It's not really a straightforward answer, if you ask me.
Yeah, absolutely. Because I actually want us to close by 7. And maybe just to assist
Okay.
in answering that. Because the person that's why the person referenced small companies. So let's say I'm a small company. Let's say I earn 25 or 40,
Okay.
let's say I earn 40 million naira. Now, people are advising me that I mean, I'm currently business name. Then people are now advising me to go into limited so that I'll be exempted from profit and all of that. So if I'm to do limited, I'll do some filing, some compliance. Without cost, will it not outweigh the PIT that I'll have suffered if I remain under business name and all of that? And I think this is a very, very valid question. And which is one of the reasons why we say it is not just about because of the rate of the taxes
Tax, not
and
just about
exemption.
tax.
It may be important for you to actually look at cost benefits like this and all of that. If you have to, because under CIT, even though you'll be exempted, you still have to comply with some fines like CIT. I know VAT, you are exempted. You are exempted from registration and filing. But for CIT, you'll have to file. And for you to file under CIT, you'll have to get some of your documents. I found out one section yesterday, interestingly, that for small companies, if you don't have AFS, you can use this statement of accounts, or what was the wording of the law
Simplified.
regarding that. Exactly.
Yeah,
So
that's simplified accounts.
okay, so there's not a question that does that imply statements of affairs or bank statements and all of that. But the bottom line is that, I mean, compliance will definitely cost you something and all that. So I think I would like to throw it back to the person that asked this. You do understand your business more than you and all of that, because people that prepare your documents for you, they may want to charge you or bill you based on the weight of your transactions and your revenue and all of that. So you may want to carry out this cost benefits analysis and go for the one that you think will be more favorable to you. So in the interest of time and
Okay,
and
BBM.
other okay.
Sorry, so just to cap up that question. So I want everyone to not just, yes, tax is in the space now, but when it comes to the business decisions, what you want to achieve, right? Either ways, you find yourself in CIT, or you find yourself in PIT, there are taxes to be paid, right? And also, you don't want to be under 100 million forever. I mean, you want your business to grow at some point. You want to be a $1 billion company, or as case may be. So tax will always be there at some point, right? But I don't want your business decision to just be around tax. There are regulatory consideration, there are financial consideration, even getting loans from bank, like that. There are so many considerations that you should look at. So don't just look at it as, let me just look at tax. Some of the things that we have in the space now, they are not new, right? They are not new. It's just exemptions or threshold being increased. So I don't want your business decision to just be about tax alone. And also for the small company, right? I don't just want us to limit the definition to 100 million threshold. The law is clear around it. Said a small company is defined as company who has a gross turnover of 100 million or less with total fixed assets not exceeding 250 million. So if these conditions are not jointly, even though your turnover is below 100, I mean, some people will say if you are a small company, you probably don't have assets up to that amount. But I mean, there will still be always the exception or outliers that where your fixed asset might be below or might be above 250 million. So please look at this very well, right? It's not just about your revenue, also your fixed assets must be considered. So I think we can just round up now. I know there are other questions you asked me, as we can have the opportunity to have sessions like this probably in the future. We still have more questions. Like I mentioned, we have over 250 questions. I mean, we just thought this was just the conversation between us and the few friends, but I mean, we have this now that we have to discuss more. So there are other questions we still have to, we'll still look into. I'll still collect the questions, and some that we might probably still be able to answer in our respective community and in any of our posts. And most of us are connected with us on LinkedIn and on WhatsApp. So I'm giving this back to you.
All right, thank you so much, Olamide. Thank you for that. So I would like to appreciate everyone for joining the call.